a research analyst at Abacus Asset Manager, wishes for a very happy 2025 ahead. The year 2024 has been an eventful year. Global equity markets displayed resilience amid a complex macroeconomic backdrop, with Indian markets once again outpacing many global indices, driven by strong domestic growth outlook and investor optimism. Looking ahead into 2025, the outlook remains cautiously optimistic, with India in particular expected to continue its growth momentum. We have with us today Sunil Singhania of Abacus Asset Manager to get a more detailed perspective and outlook for 2025. Welcome and thank you for joining
Thank
us
you.
today. So, as we move into the new year, what are your expectations or outlook on the Indian economy and equity market?
So as you said, I think 2024 turned out to be a great year for India, and that was despite the challenges. I think the last 6 months in particular has been full of challenges. We had multiple state elections, the US elections, we had geopolitical concerns, and growth also did slow down, in the September quarter. However, as we move ahead, we are full of optimism. Government spending should pick up pace in the second half of FY25, and corporate profitability should also pick up. So I think we remain quite optimistic as we move ahead, as we always are.
Trump is set to become the US president again in January. He has been very vocal about trade tariffs and geopolitics. What are your views on Trump becoming the president again, and how will it impact on the global markets and inequity?
So yes, Trump is slated to be again taking over as the president of US. He's been very vocal on trade tariffs, particularly on China, Mexico, and US, and to some extent even on countries like India. However, our view is that he will be more harsh, particularly on China, and that can be a good thing for India. I think already the China plus one strategy has been benefiting Indian corporates, and hopefully as we move forward, it can again be of good benefit for India. Also, Mr. Modi shares great relationship with Trump, so it is expected that Trump coming up can be mildly positive as far as the Indian economy and markets are concerned.
Also, the last 4-5 years have been exceptional for the Indian equity investors who have made great returns. What are your expectations on the years ahead?
You're absolutely right. Last 4 years have been dream years for Indian equity investors. We always say this, that, a lot of things which could have gone wrong have gone wrong. We had once in a century kind of a COVID event. We had a once in a century kind of war situation with Ukraine and Russia, and then in the Middle East with Israel and Hamas and then Iran. And you also had Credit Suisse-like organization also going belly up. Despite that, I think India has demonstrated resilience. We call it the 4D effect: democracy, demographics, domestic demand, and digitalization. And our view is that looking at all this, the outlook on Indian growth and India growing at 6.5-7% continues to be pretty good. Yes, India has seen challenges in the near term, as I mentioned earlier. But with all these 4Ds coming into play, I think India in particular should do well. The world will also start to grow a little bit. However, the outlook on Europe in particular seems to be a little bit more muted. But India, I think, amidst all this, looks to be the best placed.
Given your positive expectation on the equity market with moderate return for equity investors, how do you adjust your philosophy and strategy?
So, as I said, last 4 years have been great, and looking forward, though we expect positive returns, as you rightly said, the returns look to be a little bit more moderate going forward. At Abacus, we have always followed a fundamental basis of investing. We do believe that, equity investing, particularly on the listed space, has to be more fundamental based. And as such, our philosophy continues to remain very, very stable, as we have always done over the last 5-6 years. So we look at companies with profits. We look at companies with ROCs and ROEs of at least 14-15%, and where what we pay today should be more than repaid back to us by way of future profitability. So it's possible that in a momentum kind of a scenario, other stocks might do well, but ultimately I think this strategy has worked beautifully for us, and we would continue to remain focused as a fundamental based asset management company.
For investors sitting with significant gains, what approach would you recommend them to take in the equity market going?
So as I said earlier, I think equity investors have had great last few years, and there's always this itch of booking profits. Our view is that there is definitely going to be returns made. Obviously, not to the same extent as the last 4 years, but still, low to mid-teen returns can be expected from Indian equity, markets. And as such, I think investors would do well to just stay put. Unless of course there is a requirement of funds. But otherwise, we would continue to believe that investors would be in a position to make returns which are more than any other asset class as far as Indian equity is concerned, even going forward.
What advice would you give to the new investors coming into the market at this time?
I think it's a tough call because new investors would have felt that equity markets are already so high. But as I said, I think the growth in the economy still looks to be a good 6.5-7% going forward. Corporate profit growth should be 12-13%, 15% going forward. And I think equity returns, though lower than last 4-5 years, would still be a good mid-teen, in that zone. And if you look at other asset class I mentioned earlier, I think equity still stands out. So I would say that for new equity investors also, equity is a great, avenue to create wealth. However, just be cautious about the return expectation and just also be focused on fundamental based investing, momentum investing, investing in IPOs at some obscene valuation, trying to chase narrative or theme based stocks. I think these are all very, very risky at this point of time. So be positive, but invest on a fundamental basis.
Thank you for guiding us and our investors with your candid views on the Indian economy and equity markets. Have a great 2025.
Have a great 2025 to all our viewers.
Bye. Thank you for joining us today for this insightful conversation.